It's been a good start to 2020 on the equity markets as China's central bank announced it would slash the reserve requirement ratio by a further 50 basis points from Monday the 6th of January. Meanwhile, hopes surrounding the China-US trade relations helping investors shrug off weak data showing that British factory output fell in December at the fastest rate since 2012. Let's take a look at some of the charts kicking us off for 2020. First of all, the FTSE 100 up in today's session. 76.06 is where we stand at the moment. You can see clearly today's trade, despite the fact we got the MACD pointing down. That is now bottoming out. So are we now to test these highs that we've seen recently on this market around Christmas? We saw a trade of 76.87 and we're currently trading at 76.06. If you're long on this, your stop would go around about the 7,500 level. FTSE mid-cap 250, very different picture. We are in today's session on this first trading day back in 2020. We have scored a new intraday record high. 22,060 is where we are here. Any long trade here will be supported by a stop somewhere below current price action around about the 21,200 level. Doesn't stop there either. Continental markets also gaining. This is the German DAX with this rise that we got here at 13,363. Don't forget, we're on this long-term inverted head and shoulders pattern here, which in theory could give us a trade well above the 15,000 level, possibly if we get a full completion of this. We broke through this head and shoulders on the 14th of October last year, 2019, and since then the markets have been up, but having a good start at the beginning of 2020 with a rise to 13,362. One of the best performing stock markets was the US high-tech NASDAQ index, but I want to show you here this near 30% rise we saw last year for the US 500, the S&P 500. In today's session, we're challenging the all-time intraday highs that we saw at the back end of last year at 32.51. A current trade on the 24-hour markets on the IG platform, 32.46, looking for a strong start when trade gets underway. Meanwhile, on this chart here, sterling has held steady after Prime Minister Boris Johnson assured the nation that the UK is on the verge of a new chapter and that he would finish the job by delivering Brexit by the end of this month, with the hard work still ahead, of course, and attempting a trade agreement possibly in outline only by the end of this year. But this is how sterling started this year. I've got this fib here from the highs that we had back on the 12th of December at 135.15 and the swing low point at 129.11 that we saw just a couple of days before Christmas. Since then, we see money going into sterling, albeit in relatively thin markets. But today's news from the British Chambers of Commerce putting a lid on its expectations for growth this year, all the way down from 1.3 to 1% for 2020, has hit sterling in today's session. Current trade at 132.06, one of the markets that has suffered at the hands of what has been a stronger dollar at the start of 2020. That's a quick wrap round of what's happened at the beginning of the 2020 year on the markets.